What's good, everybody? Have you ever been just staring at your trading screen and just feel like it's a complete mess? Way too many indicators, too many strategies, too many setups, man, and you're just still losing money with all the indicators you have, right? I've been there, right? I think most of everybody successful have been there. And again, most of these so-called gurus are out there just showing you 20 indicators on a chart, dropping a new 5-minute hack every fucking week, and leaving you fucking confused. You don't know what to do, and that's not trading, bro. That's if you're changing your strategy every fucking week, you're gambling.
Like I talk it, walk it like I talk it. Yeah. Take my shoes and walk a mile, something that you can't do. Hey. Big talks of the town, big boy gang moves. I like to walk around with my chain loose.
My name is Elder, and I'm here to keep it 100% real. I use one simple way of reading the market that lets me adapt to any given condition. It's a repeatable strategy that has helped hundreds of people stack constant and consistent profitability, man. It's not about chasing quick cash. It's about just mastering the skill of knowing and giving a great idea of where the market's heading, right? Reading the market, reading the story. So if you stick with me, I'll break down everything for you. I'll help you trade fucking smarter and not harder, right? It's simple, like every good strategy should be. So getting into it, if y'all don't know me, I'm Elder. I've been trading for about 10 years now, most of those years live. I have made $31,000 this week, $38,000 for the month so far on a hot win streak. And I'm going to show you exactly how I did this right here, step by step, using the same process I use to read the market, right? Very, very simple. So let's just go ahead and break it down and get right into the action here, guys, right into the action. So to start us off, right, we'll go ahead and go over something very, very simple. Now, if you're a complete beginner to trading, I have a video on my channel that goes over kind of everything about trading in depth, what you're looking at, charts, all this shit, right? So if you're completely new, please check out that video first and come back here. This is going to be an advanced video going through every single bit of my setup. Now, as you can tell, looking at a chart, the first thing you're going to want to do is have a longer term view of the market. We're going to go over exactly how to do that. So let's start off with the first step and just kind of clear all these drawings, right? I'm also go over every single trade I took this week to make $31,000 and how I use my strategy that I will explain during this video to make $31,000, right? So what first thing I like to do is zoom out into the 4-hour time frame chart. We're out in the 4-hour and we'll go ahead and see exactly what the market is doing, what the market currently looks at. So we are currently trading at all-time highs. A lot of traders struggle at all-time highs. It's a difficult condition to trade, but because of this strategy, you're actually able to adapt to any current market condition and actually perform really, really well. So we are at a consolidating, very bullish market. So by that being said, on the 4-hour, how do you determine what a bullish market is, right? You look at the highs and you look at the lows. So as the market's been flying up, right, we've been making higher highs and higher lows, right? Higher highs and higher lows. Now, recently, we've been in a choppy, long time frame session. So that's how I determine what kind of session the market is currently in, right? That's step number one. Now, what you have to do once you determine this session is if the market is in an uptrend, right? Trending up, higher highs, higher lows, you want to drop higher size, right? Higher cash on longs, right? And lower cash on shorts. So if it's shorts, you drop lower cash, right? If the market is in a trending cycle like it is right here, what you want to do is drop higher cash, right? If you're going short off the top, right? And long off the bottom, right? That's how you want to play balance ranges. Is the A plus setup is short off the top, longs off the bottom. And if it's uptrending, more cash on the uptrend. And if it's downtrending, more cash on the downtrend. That's how I manage my size based on the structure of the market. The trend is your friend and will always be your friend. So going into a given day, I decide what is the current trend of the market. It's obviously fucking bullish, and we're obviously in a little bit of a balance range on the 4-hour chart, right? Then I jump down into the 30-minute chart. I will use the 4-hour, 1-hour, 30-minute, and 15-minute chart to draw levels, right? So thankfully for me, I have this indicator right here that actually automatically plots out my levels for me, meaning that it will literally come and draw every single level I'm looking for. So the first thing we did is identify the trend of the market. That's step number one. The second thing is we have to find our key levels to place trades, right? And that's my supply and demand level. So if you want access to this indicator, I'll plug it down below in the description. There's a current wait list for it. We're not going to release it to that many people, but I'll pull it down below in the description. If you don't have the indicator, what you can do is go on my other YouTube videos that shows you exactly how to draw the supply and demand levels. It's very, very simple to do so. All you do is find a nice little bit of a balanced range before an aggressive move down or up, and that's your level. And you can tell how accurate these levels are, right? Let me just jump down to the 5-minute today and show you exactly how accurate. We took a long from demand level down here. We got a late confirmation, right? And then all the way up into our supply level, right? Let me go ahead and mark this down right here. All in is supply, and it's sold off. There's another supply here that got taken out, and it's sold off again from supply, literally the exact same level. That's how awesome these indicators are, but you can draw these on your own, which I do all the time as well, right? So the next thing we do again is we go and find our key level. So if we identify the longer time frame, right, is in a bearish market, or sorry, a bullish market, right? What we then want to do is find opportunities to go long. So you then want to go long off of demand levels, right? So right here, we went long off of a demand level. We bounced off of it. Right here, we went long off a break retest of supply. So there's two different things we're going to want to do when the market is long. We're looking for bullish, right? We find our key levels. So we're either waiting on a bounce off of demand, right here, or waiting for supply to be broken. So right here, we had supply, we broke supply, and waiting for the retest of supply to go in long, right? That is how I will play these levels. So we need a supply break retest, or we need to bounce off of demand. Very, very, very simple, guys. Nothing too crazy going on here, right? So once we have that, right, we have to go back in and view the market in a different eye. We're going to look at order flow. We're going to look at the volume. We're going to look at times and sales. We're going to look at a bunch of different things. But just to confirm a couple things that we're looking at, right? Back at it. So the market is currently bullish. What we want to do is look for longs off demand and longs off break retests of supply, right? Very, very simple. So on the 5-minute time frame, right, we go and we look for bounces off demand. What you want to do to get that extra confluence, right, is wait for volume to die out. So if you kind of tell by the volume bars here, as we push into demand, the volume dies out. Good chance the market's going to reverse if volume dies out. So that's an extra confluence you want to have, right? Now for long, since the market is very bullish, I do not need to wait for a 5-minute structure shift, right? If I see a short off supply, which we took a short off supply here, this level kind of got invalidated, so it's not there anymore, but this was a supply level, right? Let me go ahead and draw it for you guys. We took a short, but look how late my entry was, right? If we're going against the overall structure of the market, what I want to do is wait for a structure shift. Meaning, if the market is just pumping, I don't want to be the first seller, right? I do not want to be the first seller. So I wait for the market to go up. And then whenever we make that lower high, right, and we come back in and make a lower low, then a lower high, and then a lower low, then I can hop into the market, right? I want to see the 5-minute structure shift, make a lower low, make a lower high, to go against the trend of the market. This will increase your win rate significantly if you have not been doing this. Remember, we don't try and guess. We're not playing guesswork. We don't want to be the first seller. We don't want to be the first buyer, especially if it's against the overall structure, overall trend of the market. Now, if we're going, with the structure and with the trend, right, we can definitely not wait for a retest. So kind of something that happened here that I did kind of catch the retest. So why I got in here, right? I'm gonna let y'all spend some time on thinking about it. And exactly, right? We had a beautiful supply right here that we had pre-market, right? That got broken, retested, bam, longs, right? It's that easy. It's that easy, right? So this is kind of how you're going to set up the play. Now you might be thinking to yourself, Elder, how do you actually enter these trades? What is your entry trigger? What is your entry confirmation? That's what we're going to go over. That's going to be the bread and pudding, right? But I want to make sure that y'all have this completely down. Long market, we're looking for longs of demand, breaks, retest of supply. If I'm going against the trend, right? Against the structure, we need to wait for that 5-minute structure shift to be in our favor. And I use this setup, right, for every single trade I took this week where I made $31,000, right? Right here, break retest of supply. Right here, break retest of supply. Right here was a short off of supply, but we went for this 5-minute structure shift. Then we got in, right? Right here. Now, this was a choppy day, but I took shorts off of supply twice, right? This was before, during this, the market was bearish. So I did not have to wait for a 5-minute structure shift. I didn't even need to wait because why? We were consistently making lower lows and lower highs. The market was already bearish. So we took 2 shorts off supply, paid out, right? Now, this day for me was difficult. This day, right, is when the market was shifting structure. So it was super bullish, but this was the day where the overall longer time frame shifted to bearish, right? So because of that, I was aggressive on longs. I was mostly trying longs. And again, it was a demand level right here that got broken, right? I got in into I got a break-even day, right? I got in longs right here. I got in longs right here, and the market did not want to go in my favor. This is when Trump dropped tariff news and completely wiped out my process. So again, I do lose. I will lose, right? Totally normal, but this has a very, very high win rate if you play it correctly. Now that you have all the, the nitty-gritty of it, now that you know what you're looking for, the levels you're looking for volume to die out, you're looking at the overall trend of the market, you know exactly what you want to do, we're going to go in deep into the order flow where I'm actually placing my entries, right? So for that, I need to give you all some information first, okay? Let's go ahead and start this guy up. It's beautiful, not boring at all, right, guys? So subscribe right now. Quick overview where we're going to go over, right? So what you need to see on Bookmap, right, on footprint charts, and we're talking about order flow here. We're talking about the volume of aggressive buyers, aggressive sellers, the volume of passive participants that are sitting in the market. If you are confused by what I mean, there's a 2-hour-long video on my YouTube channel, right? Go check it out. I'll link it down below in the description that goes through every single thing I'm talking about here in depth so you can have a full understanding. Go watch that first and come back right here. Now, if we're talking about, again, right, once we're at those key levels, once we're at my supply and demand level, we go look at the tape. What is the tape telling us, right? Who is in control, okay? So buyers and sellers losing control. So you're looking for the first thing is absorption, exhaustion, trap participants, right? Right? Absorption just means that there's aggressive buyers getting absorbed by passive sellers and vice versa. Exhaustion means aggressive buyers are dying out. And trap participants are really big single participants that have no movement above or below them once they come out. We'll go over that in a little bit here, guys. We're looking for the balance range, right? On the tape or price action, and then the buyers or sellers taking or regaining control. Let's go over what all that means. So these are the steps we're going to use to identify this exact setup. Now, I use this for every single entry I took this week was this framework right here, right? Are aggressive buyers filling passive sellers and holding above? Are aggressive sellers filling passive buyers and holding below? This is how we're going to determine who is currently in control off the Bookmap. If this is fucking native to you, I highly recommend you go check out my video, guys. I have a bunch of videos on Orderflow, a bunch of videos on Bookmap and footprint charts. If you're trading with just lines, rectangles, boxes on a candlestick chart, you're not trading real data. You're literally trying to get lucky. You need to trade real level 2 data. So what I mean by who's in control, right? Again, I have a full video on Bookmap, but what you're seeing here is these red circles, red bubbles, right, are the aggressive sellers. The green circles are the aggressive buyers. These are the buyers who are hitting the ask. They're paying a more expensive price, getting in at a higher price. They want to buy right now, hence they're being aggressive. For the sellers, they're selling at the bid. They're willing to sell at a cheaper price, hence they're being aggressive. Now, all these lines you see on the chart are the passive participants, the limit orders, the stop orders. So if it's above price, right now price is at 305. If there's an order above price, they're sellers. These are limit orders. They can get canceled at any second, right? Below price, these are buyers, okay? Keep that in mind. Now, this is how we determine who is in control looking at Bookmap, right? If you see aggressive buyers filling passive sellers, right, and then holding above, filling passive sellers, holding above, right? Filling passive sellers, holding above. So what this means is these lines above price, right? They're passive sellers. They fill the passive sellers, hold above price, meaning that buyers are in control. Fill the passive sellers, hold above price, buyers in control, right? And you see sellers come back down, fill passive buy offers, but do not hold beneath them. So passive buyers in control, aggressive buyers in control. It's a very bullish market, not just looking at candlesticks, we're looking at true data. And then what happens, right? You see buyers start to get exhausted. So let's see what that means, guys. Buyers getting exhausted. Let's go ahead and open this bad boy back up right here. Perfect. So steps to identify, right? Again, who's in control? And then the trigger, absorption, exhaustion, dead volume, imbalances, trap participants, all the above, right? This is exactly what we're going to look at right now. So buyers in control. And then what do we see here? We see the green bubbles significantly die out. We see absorption. We see buyers now filling passive sell offers, but really not holding above them. And we see buyers getting smaller and smaller and smaller. And then what happens right after, right? What's the next thing we need to use to identify them? After your trigger, right? Do aggressive buyers start filling passive sellers and hold below price or above price? Are aggressive sellers filling passive buyers and holding below price, right? That's the next step. So by that being said, we get buyers in control, we get exhaustion, and then sellers now take control. Now sellers are filling passive buy offers and holding below. Now buyers are struggling to fill passive sell offers and hold above. So sellers are now regaining control, right? And this is happening all throughout the market. They get exhausted, buyers then take back control, right? They get exhausted, buyers take back control, buyers here get exhausted, and then sellers regain control. We see that all throughout the market, guys, which is why it's very, very crucial that when we're using this, we're going to combine this with our supply and demand levels. We're going to combine this with the overall sentiment, the overall theme of the market. Keep that in mind, right? Now, the objective, right, is to identify a structure shift happening in the market auction. So we have to be understanding the market here, right? What is the auction theory, right? What is the market auction actually telling us? So a good analogy here for those of y'all that like to use those. So the auction theory in the market is describing how buyers and sellers keep adjusting their bids and offers until they agree on a price, right? Where most of the trading is happening. So the stock market is like an auction, like a car auction, real estate market. It's a market, right? It's like an auction that will move up until the last buyer buys, and it'll move down until the last seller sells. So think about it like a big farmer's market, right? Everybody's shouting out what price they'll pay, what price they'll expect or accept for what they're selling. And the price settles where the most people say yes, where the most people agree. That's where price will like to be at, right? The market is main job is to advertise price and facilitate trading. So if there's no transactions as prices going up, up, and up, it has to move down and get people to come back in and play again. Okay, so keep that in mind. Now, the market trends are important to kind of identify, what the actual tape is doing. What will the market do after this? So there's a bullish market, right? What happens when aggressive or passive buyers stay in control and keep holding higher prices? There's bearish markets where aggressive or passive sellers stay in control and keep holding lower prices. So the balance range is when the bears and the bulls are chilling, right? Like this picture right here. So it means they both agree on a price. It's the fair price point. Neither side is really in control. They like where it's at. They want to trade right here. And especially in a higher time frame, you see this kind of a balanced range right before the market shifts direction, right? Which is why you never guess the breakout. You wait for it to be broken out of. You wait for exhaustion, right? You wait for the consolidation to be broken out of, and then you follow the move up the retest. You were never going to be early, guys. So what I mean by that, going back over to here, right? If the market's chopping, let's see if we can find a good example on a trade we took here off of the, we're going against with the trend or with the trend or whatever it really is, right? This was kind of a decent example on a trade we took, right? Because we missed the long off demand. But if we're going to say, right, let's go ahead and say right here, this was a balance range in the market, right? The market then breaks the balance range. We wait for that aggressive close. We wait for that aggressive close above the market, retest the balance range, and then we go long, right? We're not going to go long right at the top of the balance range because we know there's a good chance the market might reverse, right? We're not going to guess if the price is in a balanced fair range. Why would we guess? We wait for the aggressive breakout. Look at the volume on this breakout. Then we get in off the retest, right? Very, very important. This is part of the trade I took today, right? We wait. Waiting and being patient is very, very key. So similar to what we just now talked about, the market is in a fair, balanced range. Both buyers and sellers agree on price. Then it gets the aggressive breakout. Now we're like, all right, fuck this shit. Sellers, we've taken fucking control. Bounces back up, retests, and then starts to sell off. Wait on the retest, wait on the breakout, wait for confirmation. Now on the 5-minute chart, I always wait for a 5-minute close, aggressive close with high volume and high aggressive buying above the zone, or I don't count as a retest because again, this could happen right here, right? Wait for the good close and then get in on the retest, guys. I cannot stress that out enough. But it's a very, very simple confluence, and this is something we've been trading literally every single day this month, and I'm up almost $40,000 with this exact same setup. And you can read this and use this on any kind of given market, right? You find the overall market trend, right? Then you wait for price to approach. So let's say like we come back up here, we finally break this level, right? Then we want to go ahead and watch the tape, right? But before we watch the tape, we're looking for the retest, then we're looking for price to then start pumping back up. So let's go back and look at the book map to see what that might look like, right? Kind of what happened here this morning. Aggressive buyers come in. Where's the one that happened this morning off a retest? So it was right around here is when we entered, right? Aggressive buyers come in, they're in control, they break a key level, they fill all those offers, like how aggressive the buyers are, and then we come back down and we start to retest, right? The book map's retesting. And what is it looking like on the retest? Sellers are not holding below these 293s, 294s. So what that tells me is, okay, buyers are in control. We just broke a key level. The overall market structure is bullish, right? I'm going to wait for a retest. Sellers stopped here. Exhausted here, stopped here, stopped here, stopped here, stopped here, while buyers were still filling those offers and making higher and higher bids. So after this happens, what I can do is get in long after I have confirmation that sellers were getting exhausted, who had a weak retest, right? Put my stop loss right below where sellers do not or cannot sell it back into, where buyers are defending, right? We had all these passive offers come in. Buyers were defending these prices. Get in long right there, have a very valid validation, and take the market to the upside, okay? So let's talk about target, right? What was my target? So for this, my target was these 310s, right, up here. But what ended up happening, I had a trim at these 305s, and then I trade the New York Open. I'm not going to stay here for 6-5 hours, so I trail my stops. So I got most out at 305s. I made about $5 grand today, and the rest got stopped out for 4 points in the money. I'm trailing my stop. I have videos on risk management, how to do this if y'all are interested, okay? But hopefully y'all enjoyed this video. Hopefully y'all learned a decent bit. Don't reinvent this whole wheel. Keep it simple, right? No 17 confluences. We're literally just looking for a specific few things, guys, that are very easy to read, right? We're looking for supply and demand, trend, price action. What's the market doing, right? And then we read the tape for entry, okay? When they're approaching these levels, what is happening? What is happening, right? Are buyers still in control? Are buyers exhausted and then sellers take control, right? So for my exact entry trigger, which is something I have to explain to you guys here, is for a setup. Now, if I'm going against the overall trend of the market, what is my exact entry trigger, right? What is my exact entry trigger? So instances, like let's say I'm going short, right? I wait for buyers are in control. I wait for buyers to get exhausted. And then whenever I see sellers regain control, remember this is the whole process, I'm recapping. Whenever I see sellers regain control, right, fill passive buy offers and hold below, I'm in. Same thing on the other side, right? Let's say, let's see, sellers take control. We see exhaustion of sellers. And whenever buyers start filling passive sell offers and holding above, I'm in. That is the entry trigger, guys. It's very simple, very easy to do, right? Just think about it, test it out, but stick with it. And most traders fail because they quit, right? If you can check out my free course, I'll link it down below. It goes over all of this in super depth. Even if you're a complete beginner, I recommend you check it out, right? I mean, if you want to book a strategy call with me so I can talk to you about what your strategy is, what you need to change, what you need help with, it's free. I'll leave it down below as well. You can book a call with me and my team, and we'll go over everything. I hope you all enjoy this video. I ask you, please subscribe. Please, is all I ask. Just do it. Just fucking do it. Anyways, I will see y'all in a jiffy. Peace out, guys.